Hey everyone, welcome back to the channel. Today we're talking about something huge, Bitcoin's potential surge to $67,000. With recent macroeconomic indicators, especially the latest Consumer Price Index (CPI) report, many analysts are becoming increasingly bullish about Bitcoin. Could we be on the verge of a major Bitcoin rally? In this video, we're going to break down exactly why the CPI data is so important, how it affects Bitcoin, and how you can position yourself to make the most of this potential price bounce. If you're invested in Bitcoin or thinking about it, stay tuned because this is information you don't want to miss. What is CPI and why does it matter for Bitcoin? Let's start by talking about the CPI, what it is, and why it matters for Bitcoin. CPI, or the Consumer Price Index, measures the average change over time in the prices consumers pay for goods and services. In simpler terms, it's one of the primary ways we gauge inflation. When CPI numbers are high, it signals that inflation is rising, meaning prices are increasing and your money buys less. But when CPI is low, it indicates that inflation is easing, making the environment more stable for financial markets. Now, why does this matter for Bitcoin? Bitcoin is often seen as a hedge against inflation. When inflation is high, investors flock to Bitcoin because it's decentralized and not controlled by any government or central bank. However, Bitcoin thrives even more when inflation cools down because lower inflation reduces the need for central banks, like the Federal Reserve, to raise interest rates. Lower interest rates mean more liquidity in the market, and when there's more money floating around, risky assets like Bitcoin benefit the most. The latest CPI numbers have shown a cooling in inflation, which is a signal that the Federal Reserve might not continue to raise interest rates. This is fantastic news for Bitcoin investors. Historically, Bitcoin performs well in periods of low inflation and low interest rates. With the current CPI trends, we could be setting the stage for another massive Bitcoin rally, potentially reaching the $67,000 mark. The impact of CPI on Bitcoin prices. To understand how important CPI is for Bitcoin, we need to look at historical trends. Over the years, Bitcoin has shown a strong correlation with macroeconomic factors like inflation, interest rates, and liquidity. When inflation is high, central banks raise interest rates to control it, making borrowing more expensive and reducing the amount of money flowing into risky assets like Bitcoin. But when inflation eases and CPI numbers come in lower than expected, it means central banks are less likely to raise interest rates. This creates a more favorable environment for Bitcoin. In fact, during periods of economic stability with low inflation, Bitcoin has historically rallied. For example, let's look back at the 2020 and 2021 bull runs. During that time, the Federal Reserve slashed interest rates to nearly zero to stimulate the economy amid the COVID-19 pandemic. This created a flood of liquidity, with money pouring into various markets, including cryptocurrencies. Bitcoin surged from under $10,000 in early 2020 to an all-time high of nearly $69,000 in November 2021. This was partly fueled by the economic environment, with low interest rates and massive government spending to boost the economy. Now, with the CPI indicating that inflation is cooling, we might be on the verge of another significant Bitcoin price movement. If inflation stays under control and the Fed holds off on raising rates, Bitcoin could easily see another bull run, potentially pushing prices toward that $67,000 mark. How CPI influences investor sentiment. So, why does CPI have such a big impact on investor sentiment? It all comes down to confidence and risk. When inflation is high, investors become risk-averse. They shift their money from risky assets, like Bitcoin, to safer investments, such as bonds or treasury bills, which offer more predictable returns in a high-interest rate environment. This is why Bitcoin often struggles when inflation and interest rates rise. Investor sentiment is crucial for the crypto market. Unlike traditional stock markets, which are influenced by company earnings, crypto markets are largely driven by sentiment, speculation, and macroeconomic trends. When sentiment is positive, it can trigger massive inflows of capital into Bitcoin, pushing prices higher. And right now, with CPI numbers looking more favorable, that sentiment is turning bullish once again. The Federal Reserve's role and its impact on Bitcoin. The Federal Reserve's decisions on interest rates are closely linked to inflation and CPI data. When inflation is high, the Fed raises interest rates to bring it back under control. This typically has a cooling effect on risky assets like Bitcoin. However, the Fed's recent comments suggest that it may pause its rate hikes as inflation shows signs of slowing. This could be a major turning point for Bitcoin. A more dovish Federal Reserve, meaning one that is less inclined to raise rates, creates the perfect environment for Bitcoin to thrive. When interest rates are low, borrowing becomes cheaper, and investors are more likely to take risks in search of higher returns. That's when Bitcoin tends to shine. In the past, whenever the Fed has signaled a slowdown in rate hikes or even a pivot to lowering rates, Bitcoin has surged. If the latest CPI data is anything to go by, we might see the Fed hold off on further rate hikes, which could trigger another influx of capital into the Bitcoin market. This could drive Bitcoin's price upward, possibly to the $67,000 level that many analysts are now predicting. Historical correlation between Bitcoin and CPI. Let's dive a little deeper into the historical correlation between Bitcoin and CPI. Bitcoin has always been a highly volatile asset, and its price movements are often influenced by external economic factors. One of the most important of these factors is inflation, which is measured by CPI. During periods of high inflation, Bitcoin has gained popularity as an alternative store of value. This is because traditional currencies tend to lose their purchasing power when inflation is high. Investors look to Bitcoin as a hedge, believing that its limited supply makes it a better store of value than fiat currencies, which can be printed at will by central banks. However, Bitcoin performs even better when inflation cools and central banks ease up on interest rate hikes. We saw this in 2020 and 2021, when low inflation and near zero interest rates helped drive Bitcoin's price to record highs. As inflation eased and CPI numbers improved, investors became more confident in taking on risk, and Bitcoin benefited from that renewed confidence. Now, we're seeing similar conditions emerge again. The latest CPI numbers suggest that inflation is under control, and the Federal Reserve may soon pause its interest rate hikes. If history is any guide, this could be the perfect recipe for another Bitcoin rally. Positioning yourself for the potential Bitcoin bounce. Now, let's talk about how you can position yourself for the potential Bitcoin bounce. If you believe that Bitcoin is heading towards $67,000, now might be the perfect time to start accumulating more Bitcoin. With the price still well below its all-time high, there's plenty of room for growth. It's also important to diversify. While Bitcoin is likely to be the biggest beneficiary of the current macroeconomic trends, other cryptocurrencies like Ethereum, XRP, and Solana could also see gains. Diversifying your portfolio can help you capture growth in multiple areas of the crypto market. Finally, keep an eye on upcoming CPI reports and Federal Reserve announcements. These will be critical in determining the direction of the market. If inflation continues to cool and the Fed signals a pause in rate hikes, we could see Bitcoin and the entire crypto market rally. Conclusion. To wrap things up, the latest CPI numbers are creating a favorable environment for Bitcoin. With inflation cooling and the Federal Reserve possibly easing up on rate hikes, we could be on the verge of a major Bitcoin rally, potentially pushing prices to $67,000. If you're invested in Bitcoin or considering it, this is a crucial time to stay informed and make strategic moves. Keep an eye on macroeconomic data, follow the market closely, and position yourself to take advantage of the upcoming Bitcoin bounce. That's all for today's video. If you enjoyed this analysis and want to stay ahead of the curve, don't forget to like, share, and subscribe to our channel. Thanks for watching, and we'll see you in the next one.